Hello, I'm Jeff Sapersky, President and CEO of Chesapeake Financial Shares. This is our third go of making our quarterly earnings release via video, and hope we improve it each time we do it. This is for those of you who do not feel like trudging through our normal quarterly press release on earnings. This will just give you a topical overview of what we accomplished in the last quarter. Our second quarter earnings were $1.33 million, which is a 14% increase over the record quarter of the second quarter of 2009. Year to date, we're at $2.49 million, which is up 19% over the first 6 months of last year. And we ended June 30th with total assets of $604 million, which is up from year end. Overall, our second quarter is the best earnings quarter we've had in the history of the bank, which, by the way, is 110 years this year. Our asset quality remains good, paying a lot of attention to it, especially in the current environment. The Board of Directors meeting that we recently had, the board voted to increase our dividend to 11 cents a share per quarter. This is an increase of a half cent over the 10.5 cents we've had the last several quarters. Currently, our dividend represents about a 3% yield on our current stock price. At the Board of Directors meeting, we also appropriated $186,000 specifically for stock buyback. With our current PE ratio of 7.5x, we see that this is very accretive for existing shareholders and very much in line with our promotion of long-term shareholder value. On a less exciting note, last week Congress passed and the President has signed financial regulatory reform. This has been a 12 to 18 month struggle with the industry up in Washington over trying to make sure that what caused the financial crisis did not happen again, but at the same time making sure that community banks in particular were not the unintended roadkill of this legislation. My synopsis would be, I think the new legislation will adversely affect community banks going forward, even though it might take several years to play out, but time will tell on that one. The good news is the bill could have been a lot worse for all involved in community banks, but like I said, time will tell to see how well it actually goes. On a happier note, though, for the third year running, Chesapeake Financial Shares was rated by U.S. Banker Magazine the top 200 community banks in the country, as measured by a 3-year average return on equity. The good news is last year we were number 64. This year we moved up to number 32. So we're very proud of that. The fact that we're a high performing bank, and by the way that we've stuck to our knitting with our lending and a lot of our other policies, we've been able to yield great returns for our shareholders. And until next quarter, bye-bye.